All right, good morning to each and every one of you, or good afternoon or good evening, whenever you decide to watch this, or whenever I decide to send it out. Doug here with thelincolnlist.com, and I want to welcome you to the weekend edition of Stock Market Mutterings, where I always say I will do my very best to take a grope in the murkiness, try to make some sense out of the stock market over there, provide you guys with some quality trade setups, and ultimately I hope that helps put some money in your pocket. Now, as always, if you guys need help with that, ever since I moved here into the new office, been live streaming daily. So if you do need help with your trading, you're really trying to make money at this, and you want to be serious, you're looking for camaraderie, education, and growth, make sure you visit the link that's up here above or somewhere on the screen. You can start trading with us live each day that the market is open. So welcome to each and every one of you, sharing you my morning coffee, or sharing with you, I should say. I know I look a little grizzled, but this is when I do my chart work, is early in the morning. And besides, I'm always kind of rough around the edges and grizzled anyway. That's my character. That's me. That's what makes me me, right? And that's the cool part. So here's what I want to talk about. Well, we got a lot we are going to talk about today, because first, when we get involved with our talk here about the market, we finally saw what we thought we were going to saw. If you go back to the last couple of market mutterings I was talking about, I think we're going to see a little bit of a correction here soon, or a good pullback. Obviously, it happened different than I expected, but boy, Thursday, big sell-off, bell to bell. We're going to talk about that. We're going to talk about whether that's going to continue and what we're seeing here. But before we get into that, how about a tiny rant? And the rant I want to make today real quick is, we some stupid people sometimes. We come up with some crazy stuff in our mind. Sometimes we try to make logic out of things that are not logic. And here's what it is. This rally that come off the bottom has been hated. And when you see something like that happening, people sometimes scramble for excuses rather than just looking at the fact. It's Fed engineered, money getting injected into the economy, which I got a great video coming up in a couple of days, guys, about this. And just how the tax cuts have helped the wealthy this whole cycle, causing that market to do that. But then most of the herd out there is talking about Robinhood traders, like a bunch of retail traders sitting around on the couch, throwing some money into Robinhood. Now, the thing about Robinhood is I don't have any experience with them. I'm not defending them or whatever this is. But boy, they're getting a bad name, huh? They're like the noob of noobs. Like, they're going to be labeled for the rest of their life never to have any good traders. Like, everybody who's new has to go to Robinhood sort of thing. So it's like everybody's thinking that all these new traders coming to the market are causing this rally. And I'll tell you what, that can help penny stocks or smaller micros. But these 10 share positions or 12 share positions of Amazon, Google, Facebook, that's not going to help. Guys, that's fund-driven algo. That's the powers that be. The trading Illuminati, like the Goldman Sachs, the JP Morgan, that's where that comes from. But I was thinking of something cute. How long do you guys think it's going to take before the word Robinhood gets used in our community like as a verb? So what I mean is, like, when you lose money or blow up an account, that somebody says, you got Robinhood, Robinhooded. Like, maybe I'll start using that from now on. Like, when I lose money, oh man, I just got Robinhooded on Apple. Is that going to be a term? Like, how long is that going to happen? Just crazy. So I want you to watch this video I got coming up in a couple of days. It'll be posted on YouTube. It's really important about how the financial system works and where this Fed engineered money is coming from and why it's driving the market and so on. But look, I've ranted enough. I think my coffee's cold, and that sucks because I ain't drinking that stuff when it's cold. It's disgusting. So what I'm going to do is switch over to the webcam here real quick. We're going to talk about some of these stocks. We're going to talk about what we see. I'm going to give you a few trading ideas. So let's do that, okay? All right, so I am on the webcam. Let's get down to business. This is the part you like, is the webcam, when we get down to business. I got the SPY up here as usual, and let's first talk about this Thursday sell-off, where it came from, why we're seeing this. And if you kind of go back here, we've just been on this. It's a combination of things. It's never really one specific thing. The market likes to blame one specific thing as the tipping point, but it's sort of like the straw that broke the camel's back reference. It's a bunch of things that start piling up, and then it just takes one little event to just set the whole thing in motion. It's just whenever the market decides, okay, I've heard enough. So we first go back to this massive rally. And during this massive rally from March low, the market had been rallying basically on the economy opening back up, the Fed's commitment to injecting liquidity into the economy and, taking care of people's mortgages, providing stimulus to people so they can survive during these difficult times or if they get out of work. And that was positive for the market. Plus, billionaires, trillionaires don't go through recessions and they got nowhere else to put their money. And it's all just driving and prices were cheap. So you start to see that. You had NASDAQ go through all-time highs. You had the SPY getting pretty close here, and also the Dow getting pretty close here. Now, just in basic overbought, oversold, technical analysis, indicators, all that, the market was due for a rest. Just the natural economical business fundamental cycle. Stocks go up, stocks go down, markets go up, markets go down. It was just due for a pullback, okay? But when it kind of started out in the week, it just felt like it was never going to stop. And that's kind of like the market's trickery. It wants to put you into this position to where you're confused and keep you off balance and sort of just throw the scent down another direction, get you thinking, okay, we're not going to stop, sucking bulls in the whole time, just like they suck bears in on the way down. And then you get this correction. Now, people are going to look back and they're going to blame the Fed because this happened right after the Fed. Now, that could be somewhat true in the sense that maybe the Fed said some things or didn't come across at this particular time as being 100% committed, or maybe say the recovery is going to take a little bit longer. But the overall theme and what was thinking has not changed. The thoughts of the market towards the economy, the time the economy opens back up, how the economy is opening back up, all that still stands. So I think what you're seeing here right now, at least, is just some sort of either bogus reaction, an overreaction, or something to throw the scent off to get people to panic out of positions. That's my opinion. And I could be totally wrong with that opinion. I'll admit that. And I'm not too proud. I'm not too proud to admit, because I've been wrong before. I'll be wrong again. So here's what I would be looking to confirm such. If you would kind of take a look here, I'll open the bottom chart up just a little bigger here. We are at some pretty critical levels right away. Now, here's how I was thinking. I think we'd start selling like early in the week, a couple 100 points here and there, shaving some of this off prior to the Fed. Fed comes out, and then decisions made. We just cleaned all out. I mean, this was a gap and dump. And the thing about this one is you don't see very many days like this that go from start to finish and just sell. Like there was zero bounces the entire way. And when something like that happens, obviously, people panic. People wonder because it's just a meltdown. We don't get too many meltdowns. We either get aggressive moves up and down, but very little meltdowns. So let's get back to some technical analysis. You got right down here. Very close and close to, depending on what moving average you're using, very close to the 200-day moving average right here on the SPY. And into this cluster of supports here from a couple of weeks ago. I'd have to scoot over here. 527, 526s, those areas. Right before this breakout and this last run, you just pretty much cleaned that all out and landed at a very critical level, which is nice because that will clear itself up as we begin Monday. Now, just real quickly on a side note for you guys that are starting trading, and I know some of you that have been trading for a while, this is always the discouraging part about being a trader and trading and investing is it's hard for us to call tops and bottoms and things like that, but the downward moves happen so quickly. I mean, you're talking about one day takes out 6 or 7 or maybe even more of green days here. You had like 1, 2, 3, 4, 5, 6, 7 to 8 green days here, just pretty much cleaned out in one. And that's normally how it is. And that shakes everybody out and you give back gains and so on. But we're at a pretty critical level right here. Going forward, you have got to hold up this area right here, which I think is about the 295s, 200-day moving average around 295s here. Some of you might have a little different readings. I don't know why this is reading 300. The other one I've got over here is just a little bit lower than that, but I'm saying 295. You got some good support there, and then you got some supports down here into the 290s, where this gap up happened back on this day, right into here. Being so close, those are going to be vital. Because early in the week, if the market can't establish support at that level, which is likely it gets tested early on, then we've got to look lower because the chances of us getting down into maybe the 280s, 285s would exist. Now, that would be a pretty steep pullback from the recent highs. I think that would put us somewhere around 12 to 13%. That'd be pretty steep in a couple of days to have that much of a retracement. Now, I'm not really expecting that, but I'm not going to say that's not going to happen, and I'm not going to be shocked if it does happen, and I'm not prepared for that scenario, but I don't think that's going to be the case. I think in the ideal world, what would be nice is to begin Monday actually trading lower. You know, we had a pretty good spike late in the day right here. Really good rally, solid hold. We'll see how futures open up on Sunday, but I think the best scenario would be rolling down into the 295s, into that 200 moving average, solidifying that early, then doing a red to green move. You know, we love that. That's like the best scenario, which means that's probably not going to happen. So going forward, here's how I would look at market activity. If you get any flushes, you get any sell-off, if they're aggressive or strong or quick, I'd look to reverse that, especially on these names going across the board, the Apples, the Facebooks, the Nvidias. I would look for those as buys because I think you're going to get some defense on there and they're just not going to melt down. On the other side of this, if you get gap ups, I'd be very cautious about gap ups because the market could do that and there's a high chance that it does. This is also something I'm talking about here real soon in this video coming up, is how the market, I feel, is being manipulated to a certain degree here because all these gap ups seem to happen overnight. And it's easy to gap the market up overnight when there's no one trading it, right? Algorithms could do that. So it's something interesting to pay attention to. I wouldn't trust gap ups. So let's cut the BS. I wouldn't trust a gap up, not in this market. So kind of pay attention to that. We're very important levels right here. If we can't hold these lower levels where we're sitting, we might have some trouble. And trouble might be another 5, 10%. I don't see us going back to March lows. But you also have to consider that's the consensus. Every time we get a couple of sell-off days, people start getting visions of March. And that wasn't that long ago. So pay attention to those. Any sort of hold of this, I would expect us to retrace this quickly and get back up to where we were within a few days. Now, when we come to some individual names, they're sort of doing the rotating. And it's still sometimes hard to find some value. But I'm going to try to go here as I'm looking through some charts. I kind of have some interest possibly in this W day. This is one I've been looking at for a little while. It was a good former runner. Really kind of wanted it back here, but I was kind of freaked out a little bit by earnings. Didn't want to get stuck in any sort of situation. So I kind of wanted to wait. It's done a pretty good job of just really maintaining a good range-bound price right here. It's holding its moving averages. And with all these stocks, I just kind of want you to go into the thought here about to save time, I'm looking at the same trade on every single one of them. It just depends on who is going to deliver this type of trade. And that is, I need to see some price stability. Before, when we're doing the check marks and we're doing that stuff in the market, when the market is really, really strong and super bullish, it's a different story. You can afford to kind of be looser on your stops. You can afford to kind of get in a little bit early and work that trade because the volatility is out of the market and the chances of something drastic happening are not that possible. Here's a different story. You've got to use stops. You've got to be a little more cautious with your risk because the market could in fact sell off another 10% here. You got some skittish behavior happening, so we have to pay attention to it. We're looking for good solid setups and support levels to be tested over and over again. And then we're looking to short anything that gets out of control because I'm not sure it's going to hold. But I like this one here. I like to see this one trade back to 180, but we're going to need a little bit of help with that. And another one would be the Wayfair. I know some of these I talk about, and some of this pullback is welcome because some of these were real high, and they needed to be sold off. Not too bad here with Wayfair as well, holding tightly on its moving averages. It just kind of needs to clean out this upper area right here of resistance. I think if that's the possibility, that would be like roughly 190s, I think. You're going to see this thing move into the 197s pretty quick. Again, we got to see a little bit more data coming in on Monday. I'm still leaning to a bounce here, but that could change real quickly because Monday might just be a free-for-all. I don't know. But if we do stay stable, you got a couple here that don't look too bad. And also this QDEL, This is something that's been in a little bit of a downtrend for quite some time. It's been channeling a little lower here. I'll show you. It's kind of been working its way lower, lower. Even while the market was strong, this was coming in here, but it held this support in this area not just once, not just twice, but 3 times here. Really tested this 146 and held pretty good. Come up out of the shell here a couple of days. Now sitting close to the 20 on the 20 moving average. Same thing here. You're going to need a nice little clear of this shorter term resistance, roughly 166 and a half, 76 and a half, excuse me. But you broke trend. You broke that channel trend here the other day when it crossed the 160s. So you are free and clear of that. And there's some room up here. You got some 191s possibly up in this space if it wants to get going. Again, I think some of these are going to be very market dependent, depending on how we open up. So I like these. And I think the rest of them are always on the list. You always got to take into consideration NVIDIA, Tesla, Apple. I think Boeing here as well. Boeing doesn't look too bad as a daily chart. Let me see if I'll put that one up here for you. I mean, there's some good stuff here that has some really good potential. There's some good potential here if this turns out just to be another one of those sell-offs that everybody should have bought. This 5-6% correction or whatever it might be is welcome. Some of these stocks pulling back 5, 10, 15% is a good thing. It allows you to get back in at some proper prices, and that's what we're going to be looking to do. If things change and we start to see a lot of selling, these nearer term supports get taken out with ease, I would change my mind on that very quickly. And I would really look at shorting these things because they are just getting started at some of these levels, especially things like Apple, especially some of these. I don't think I would short Tesla. There's better shorts out there. Things like PayC. I mean, these stocks have been up humongous, and there's a lot of room underneath if they want to get there, but I'm not expecting that to happen, but I'm prepared for it if it does. So anyway, guys, I want to thank you for watching this Market Mutterings. Make sure you check back. Also, subscribe to the channel if you like these videos. Show your support by liking the video. If you want to keep up to date, right next to your subscribe button there is a bell. If you click that bell, you'll constantly be notified of these when I do them or when new videos I have. And I got some good stuff here. I know I haven't done the Market Mutterings on a daily basis, but I'm switching a little bit more to educational content, free educational content. I'm going to be options videos, futures videos. I got some really sort of financial videos that take a look at how your dollar is created, the valuation, the devaluations of currencies, the manipulations of currencies, how money cycles in and out through the systems, credits, debts, and all these other things that will help explain to you how internal functions of markets work. And I think it's going to be really interesting. If you have anything that you want to add, feel free to send me an email, support@lincolnlist.com, or just comment below. Until the next time, thanks for watching Market Mutterings, guys. Take care. Enjoy the rest of your day. Trade well.